Hello guys, welcome to the sharpening session. Now sharpening, for those that don't know what it is, essentially we do these sessions and we do them on weekends for a reason, because most markets are closed. We do them to go through things in more theory. In fact, I've just realised I don't have a separate chat box open, which I should have, so I can see who's there and who has questions and things, because it's mainly meant to be a questions and answer type situation. It's meant to be more of a theory. Now sometimes people come with questions and we spend our time focusing on those questions and answering those questions, and sometimes, or most of the time actually, we go through a specific topic. It might be a part of the process that we use, it might be an app that we use, it might be different platforms, it might be scans, it might be questions on fundamental analysis, whatever. We'll do different sessions on different topics, but most of the time we want it to be led by you. So if you have questions, and again I'll make sure I've got my chat boxes up, if you have questions, just let me know and I will summarise whatever point I am making and then divert into what questions you have. Now, if you have questions on top, which is the platform that we use, best to come to the sessions on Sunday with Jose, because he knows top inside out, all the answers to all the questions, whereas I might not be able to answer some of the more technical questions or some of the more specific or niche questions when it comes to top specifically. So if you have questions on the platform top, come to the Sunday sessions. Anything else really, methodology related, trading in general related, different assets, whatever, then you can come here and ask those questions here as well. Okay, so I can't see any questions in the chat box at the moment. I will keep my eye open and see what's coming and see what questions you guys have. But let's just make sure, first of all, let's make sure we cover our disclaimers. So that's top left-hand corner. Please read them, not just for legal reasons, but also to understand that these kind of videos are demonstrations. This is how we think of the markets. It's up to you to decide whether or not you agree, disagree, something in between, whatever. That's ultimately up to you. We're just showing what we do. Now, if you have any questions, if you're watching this recorded and you have any questions after the fact, please email me. That's becky@traddictiv.com. You can also email support@traddictiv.com. We're always happy to help. There's also a link you can go to, which is www.tradewithufos.com/Becky. So you can go to that link as well to post questions. Okay, so let me just explain very briefly what's on the agenda. Like I said, it's sort of lecture time, might be questions and answers, might be looking at trades. Today we'll look at trade examples, what could be kind of thing. Now, we are streaming in multiple different places at the same time. So we are on YouTube and Facebook and Twitch and LinkedIn. We're also streaming inside our closed coaching environment. So what we'll do is around about the halfway mark, and normally during the week when we're placing trades, it's going to be where we've just placed a trade. So if we've placed at least 1 or 2 trades, we'll then cut the stream and then we continue in the closed coaching. In sharpening, we're not placing trades, so it's kind of when one point is finished before we start the next point kind of thing is where we'll cut the stream. So that might be 20 minutes in, half an hour in, 40 minutes in. It's a bit more of a blur, but around about the halfway mark, we'll cut the stream to the free streaming sessions and we will continue inside the closed coaching so that we can make sure that we answer any questions you guys have in there as well. Okay, so let me just bring up top. So my plan today, unless you guys have questions where we divert, and let me just have some white space here to just write what we're doing. My plan today was to go through, and I've gone through this in different ways before, but I'm going to just expand on it, and obviously some people might not have seen those previous videos. I want to talk about UFO stats. So what that is you see these things here? These are our UFOs. Essentially it stands for unfilled orders, and what that does is it shows us where buyers and sellers are. So that's the apps that we use when we trade. So it shows us where buyers and sellers are. Now, if it's showing us where buyers and sellers are, we might want to know what's the probability that price actually, oh, didn't mean to do that. What's the probability, so UFO stats, what's the probability that price actually moves from there? So if we have buyers there, we want to know that they're there, because if price comes and hits those buyers, they're likely to go up. If they're sellers, we want to know how likely it is that it's going to hit sellers and come down. So we're going to look at UFO stats, what they mean, expand on that a little bit more, and then give you some examples of how you might be able to play about with different variables to figure out what might be a better strategy for you. So we'll go through that, and this is relevant if you use top as a platform, or if you use TradeStation as a platform, because those are the two platforms where you can see UFO stats. Now, we also have UFOs on TradingView, so I'll show you a different application of tweaking variables on TradingView as well. So that was my plan. That's what we'll go through, unless you guys come up with any questions as we go and you want me to divert off of topic. Okay, so let me just show you. My screen was just being a bit weird there. Let me just show you what these UFO stats are. So we're looking at a random stock right now. It's a Starwood Property Trust. Random stock. Doesn't matter what the stock is. Doesn't matter if it's a currency. Doesn't matter what it is. What this number up here is telling us is essentially the probability rate of the UFOs. How likely is it that the buy orders push price up or the sell orders push price down, essentially? Now, the way it's calculated, and what might actually be easier here, I'm just going to go to a different time frame. Oh, there we go. We've got sell orders here. Brilliant. So that way I can just expand on what this means. So what this number tells us, and you see I changed a time frame and that number changed, so I'll expand on that in a second. What this number tells us is the percentage of the time that price would move between a buy stack to a sell stack. The red ones show us where sellers are. The green ones show us where buyers are. So what this number is how many times does price move between the buyers and sellers? I.e., how many times, what percentage of the time do the buyers do what you expect them to do and the sellers do what you expect them to do, which is push price up or down respectively. Now, as we see here, let's assume this was the average reward to risk. It wouldn't be, but let's just say. Let's say you're using this UFO to buy, and 48% of the time price moves from here to here, which, let's say this is your risk. Well, what's your reward? 3 to 1, 5 to 1? I'm not very good at visualizing, seeing that. I'd have to do the maths and the calculations, but I think about 5 to 1, about that. So if 48% of the time you're making 5 to 1, you're doing all right. So let me bring up an Excel spreadsheet or something that might make this easier, just to show the point. So let's say, and we'll just put it here, let's say 48% of the time you're right. So this is going to be our probability, okay? Our risk and our reward. So our risk is always going to be 1. Let's just say it's 1, and then our reward, we'll make up the numbers there. So let's say in this case it was a 5 to 1. And then let's say the amount of trades that you place in a month is 10. Well, that way we can then work out and we can say, okay, so what you lost in that month is 10 trades times 100%. Oh, that's fine, sorry. 100%, 100% minus 48%. So that's the amount of times that you were wrong, times by 1. Oh, times by 1, times by our risk, and it's a minus number. That's what you lost. I think I've done the right maths there. There you go. That's what you lost. If you took 10 trades, 5.2 of them, that's what you lost. But if you took 10 trades, so in what we profited, we had 10 trades, and in this case, 48% of them were right, and each time they were right, they made 5. Thank you for correcting that. So then we see, and this is very quick maths if you're not following what I'm doing on Excel, or you might be better at Excel and you know a better way to do it, but just to show you here. So in this case, let's assume these are percentages. So if you risk 1%, you make 5%. That means in a month you might make 18.8%, even though your probability is 48%. So even though you're wrong slightly more than you're right, because you make more when you're right and you lose less when you're wrong, overall you're still profiting. And 18% per month in this random made up example wouldn't be bad. Now let's say the reward to risk was only 2 to 1. That changes things. If we make this a little bit bigger, that might be easier to see, especially if you're watching on a phone. So where we had it before, if risk was 1 and call it 1% of your account, and your reward was 5, and your probability rate was roughly 48%, then per month out of 10 trades, It would be 18.8%. If the reward to risk was 2 to 1, probability was the same, amount of trades were the same, then you've placed the same amount of trades, you're still right just as often as you're wrong, or you're still right and wrong just as often as you were before. But because you make less when you're right in this case, you make less money. It's 4.4%. That's quite a big difference to the return that you make. Now, if it was 1 to 1, each time you risked 1, you made 1, you actually lose money. You'd be losing 0.4% every month. It's a very slow decline, but still a decline. Not something we want as traders, right? We don't trade to lose money. So, this number is important, yes, but these numbers are important too. They change the landscape. Let's say, for example, somebody's only right 20% of the time. If they're only right 20% of the time, meaning they only profit 20% of the time, then if they risk 1 and when they're right they make 1, they're going to lose. In this case, they lose 6% each month. But what if they were only right 20% of the time, but when they were right, they made 10 times what they made when they were wrong? So even though they're not right very often, they're still making decent profits. Even if it was 7 to 1, still making money. So this number is important, yes, but it's not the be all and end all. It's a balance between these three things. If you are risking more, so let's say you risk 2 to make 1, you'd have to be right, I think, 66% of the time, 67% of the time. So if you're risking more and making less, so when you're wrong you lose more than what you make when you're right, you need to be right a lot more often. If these numbers are inverted and you risk 1 to make 2, then you don't have to be right as often. I think it's 33% or 34%. You know, so that number, these numbers all impact each other. And it's really, really important to get a balance with that. A lot of people want this number to be as high as physically possible. Understandably. And actually there might be some situations where that is the most relevant number. If you're somebody, and I know I'm one of these, being wrong multiple times in a row, even though I might know that if I'm right, I'm going to counteract all of those losses, is still hard psychologically to go through. Still more difficult to do as a human being. As a robot, no one would care. As a human, it's difficult to go through multiple losses, even though you know that the maths works out in the end. You've only got to be right once in a big way. So, still makes sense for this number to be as high as possible. But if by making that number higher, you are losing this to the point where it actually means, let's say you're right 80% of the time, but you risk 4 to make 1. You're right 80% of the time, you're not making anything. So it defeats the point. Ultimately, it's this number, right? It's our profitability. It's our profits, what we make or lose, that's most important to us. So we can balance these numbers in whatever way makes sense to us, but they need to balance with each other. So hopefully that makes sense, gives a little bit of context to what we're now going to go through. So this number here, coming back to our UFO stats, that says 48.02. For those that might not be able to see, it's quite small. 48.02. That means 48% of the time, let's round it down, on this stock, on this time frame, with the amount of data that's loaded, price moves between buyers and sellers. Now, if it moves more than 1.1 to 1 away, if the distance between the buyers and sellers is more than 1.1, great, you made money. Simply just by buying and selling between these two stacks of things. Nothing else. Now, we also want to add layers in. The way we trade at Trade with UFOs, we use our auto climate to say, well, if we have probability upwards, then these buy orders are more likely to work than the sell orders are, because we've got pushed to the upside. We've got a lot of buying going on. And if there's lots of buying going on, sellers have less weight. If we've got lots of buying going on, then extra buying, more likely to work. So there are different factors that we can play around with, of course. But ultimately, whatever you trade, however you trade, it's these three things. These three things, that's what you've got to balance. Your probability, how often you are right, your risk, what you lose when you're wrong, and your reward, what you make when you're right. Those three numbers are paramount. And so finding methodologies, whatever they are, however you do it, that balances these numbers in the right way so that this number, which is your P&L, is good. Let's say it was 48% of the time and you risk 1 to make 2. That's still a positive number. And then as you get better, you can start playing around with different variables that might mean that number goes up a bit, or that number goes up a bit, or that number goes down a bit. You know, but first and foremost, find the methodology, the strategy in the right way that combines these numbers in the right way to mean that this number is at least positive. And then you've got a nice foundation to build upon that you can then start playing about with different ways that you could reduce your risk, increase your reward, increase your probability. Now, one way of doing this, coming back to our UFO stats, is to use this number. That's one of the great things about this tool that, like I said, can be used on top, the Tradictive Options Planner, or it can be used on TradeStation, is that it's an easier way for you to figure out what variables might affect that. So let's go to a stock that we all know, we've all heard of, just to make it maybe easier. So we're looking at Facebook. So let's say you are a position trader of Facebook, meaning you want to be trading over the course of a few days, weeks, months. It's longer term. Weeks to months normally if you're a position trader. So if you want to be trading a few weeks to months, you would normally use weekly on the left-hand side. If you follow our methodology, you'd use weekly to help you decide whether or not to buy or sell. And in this case, I might actually change to a different stock. There we go, this makes sense. Brilliant. So we're looking at Apple now. And the only reason I did that is because on the previous example, our auto climate wasn't a confirmed climate. So let me just expand on that. Auto climate is used to tell us whether or not we should be buying, selling, or doing nothing. The previous example was an auto climate telling us to do nothing. So even though I was just using it for example purposes, I'd rather show an example where it's actually lining up in the way that I'm trying to explain. So let's say you're a position trader, you're looking at Apple, you want to trade Apple. You have a thick blue dot on your auto climate. Auto climate's a free app, by the way, on most platforms you can get it on. What auto climate tells us is where the probabilities are. Is the market likely to go up? Is it likely to go down, or is it likely to go nowhere, so that we know whether or not we should be buying it, selling it, or doing nothing. If we have a thick blue dot, ignore the lines, if we have a thick blue dot, that tells us probability is upwards, which means we're more likely to buy it. So that, by default, is going to increase the probability of the buy UFOs anyway. This number is not taking into account any of that. This number is simply how many times does price move between buyers and sellers. Okay, that might be any distance apart. That's what that number is defined off of. That's what the probability rate means. So in this case, we've got probability to the upside. We're looking at a 144-minute chart. If we use weekly on the left, we use 144-minute on the right. That's what we do. Again, you might use different time frames. And in fact, I'm going to show you something now. Now, when you first learn to trade, when you first learn a methodology, it's helpful that you're not given many choices, right? Because if we were to say to you, right as you start to learn how to trade, you know, have weekly on your left for your auto climate and choose whatever time frame you want on the right, pick whatever one you want, cycle through different ones, find your favorite. It's harder to learn, and it lacks structure and it lacks logic. Now we suggest the 144, but we might also use other time frames, and the more you trade, actually, the easier it is to then start playing about with these variables, because a time frame is a variable. A different time frame might have better or worse probability. A different stock might have better or worse probability. A different indicator that's added on might increase or decrease probability. So when it comes to time frames, let's say instead of the 144, which has 48.28%, you use a daily, well, that's 47.29%. By changing time frames, it has loaded, by changing time frames, we've dropped a little bit of probability. Now, what if we use the 2-day chart? We've dropped it again. That's 46.5%. It's even less. So we've changed different time frames and that number's changed. What if we use the 3-day time frame? That's 46.9. So what we see from that across those different time frames, the 144 had the better number, 48.28%. Now you might be thinking, well, hold on. If weekly's on the left and 144's on the right, well then if you start changing that number to different time frames, well then surely you've got to change this on the left. So I want to just go back and just explain really what we use each of these time frames for, so that it makes sense that actually this one's a bit more flexible. So we call it in our methodology the common time frame on the left and the edge time frame on the right. The common time frame, we use that word because it's commonly used. The bigger time frame is often, the ones we use are going to be daily charts, weekly charts, maybe monthly charts. It might be an hourly chart, but very commonly used time frames. And we're using that one in line with how long we want the trade to last. So if we're on a weekly chart, our trades are likely to last a few weeks. If we're on a daily chart, our trades are likely to last a few days. If we're on an hourly chart, trades likely to last a few hours. So the one on the left represents really our trading style. How whether we're a day trader, swing trader, position trader, investor, that is reflected by the one that we choose on the left hand side, our common time frame. Now, we don't do everything off one time frame, because let's say I was going to say, okay, right, we have a thick blue dot, that's probability upwards. The second thing is, if I'm going to buy, where should I buy? Where should I buy to increase my probabilities, reduce my risk, increase my reward? For us, the answer to that question is at green UFOs. If it was selling, it would be red UFOs. But for us, in this example, we're buying, so green UFOs. If all I did, and let's take the right one off completely, if all I did is look at the one time frame and I said, okay, I want my trades to last a few weeks, I want to be in a more passive, so I'm a weekly trader. So weekly is the time frame I'm going to use. AutoClimate's telling me I've got probability upwards, and hey, here's a big stack of buyers that I can buy at. Well, if I do that, then what's the size of that? That's 137.07 to 122.25. So that's 137.07 to 122.25. My risk is $14.82 to be able to get into this trade. So I'll tell you what I'll do. Let's put on, we put it back on the left hand side. So let's just make a quick note there. So that was $14.82 risk from this one, okay, by sticking to the weekly. Now, that means, let's say you have $100 to risk. You can only put, I think, what, six shares on. It reduces your position size. It increases your risk because you're using a bigger time frame. So everything's bigger. Now, what if you got in on a smaller time frame, so you're still buying because the probability is to the upside on that bigger time frame, but you're dropping down to a smaller time frame in order to reduce your risk and increase your reward. So you then come to the smaller time frame, and we're going to ignore the EMA for now. So for those that follow that, ignore it. We're going to ignore the EMA for now. You come to the smaller time frame, and then you use that UFO. Well, that UFO is 146.06 to 144.96. So if my maths is correct, that's what, $1.05? No, $1.10. One will take us to 145. Yeah, I think I'm right in that. $1.10. So now you're still buying. You're still buying in an environment where the style of trader you are gives you probability to the upside. But your risk is now a fraction of what it would be if you use the bigger time frame. Gives us an edge. It lets us get in. It gets it deeper down, more specific. That's what the right hand side is designed to do. Which means the difference between a 144 minute and a 4 hour and a daily and a 3 day and a 2 day are not as big a deal, because there's still going to be less risk than what's on the left hand side. Still going to more than likely have smaller zones allowing us to decrease our risk area. Hopefully you guys are with me. If you're on the chat box, let me know if I'm talking gobbledygook, you tell me. Otherwise, of course, if you're watching a recording, please email me if you need clarification on this. But hopefully that makes sense. So the one on the right hand side, yes, we give you time frames. So let's get rid of this for now. Yes, we give you time frames that make sense to use. So for us, we use Fibonacci numbers because that tends to actually increase that number. 144-minute chart, but if you want to use a daily, use a daily. If you want to use a 240, use a 240. If you want to use a 3-day, a 2-day, a 120, whatever. You don't want to be going too far and saying, okay, I'm trading because of the weekly, but I'm going to get in on a 2-minute chart, because then you're going to get in on a very, very tiny zone that is less likely to actually work for you. By dropping down, you decrease probability, but you also decrease risk and increase reward. So it needs to be at least close together, like not too far away. If you're on a weekly chart, I would say don't go any lower than a 120-minute, personally. If you're on a daily chart, don't go any lower than maybe a 30-minute. But you can still give it that range. So let's take an example of currencies. So let's look at the euro dollar. You see where I'm at with time? Cool. So look at the euro dollar. Here we have a situation where we would be going short. We're going short on a weekly chart. In fact, let's change the time frames. Let's go to... In fact, no, I'm going to keep it on the weekly for now, just to prove a point about the day thing. So with a weekly, in this example on the euro dollar, we have a thick red dot, probability to the downside. Now, we could sell at this UFO on a weekly chart, wait ages to get into the trade and be risking, I'm going to just eyeball that, 1755 to 1683, 130 pips roughly. So 130 pips would be our risk there. Or we could come down to a smaller time frame and we could trade at this one. That could be the zone that we use, that area that we use, and that's 8 pips. You might round it up, add a little bit of room. You see my point, that the risk here is much smaller than the risk here. Then what we can do is we can go, okay, so 144-minute gives me 56%. Come back to UFO stats, 56%. What if I use the daily chart? That's giving me 60%. Great. So that's giving me 60%. That's better, right? I want that number to be higher, assuming that the reward to risk ratio is about the same. So if the reward to risk ratio is about the same, then the higher this number, the better, right? Because let's say, coming back to our Excel spreadsheet, I said these numbers all connect with each other. Let's assume the risk to reward, let's do 1 to 2. The risk to reward is 1 to 2. And if you can keep that pretty much standard, pretty much the same, where what's available for you to get out of the markets is 2 times more than what you would risk, well then, if that's 51% and you can get it to 55%, keeping these numbers the same, well, that just increases your profit. If by increasing this number you decrease this number, might not be worth doing, but let's assume you can keep these pretty much standard, right? Let's block them out. These are the same roughly across the different time frames. So by flicking between time frames and then increasing that number, this number goes up. Okay, so this is essentially what we're doing here with the UFO stats, assuming the risk to reward is about the same. In terms of the ratio, the risk to reward ratio is the same. So the higher this number, the better. We started on a 144-minute chart and that was 50-something percent, 55%, whatever. Here we have 60.19%. Then we might try a 2-day chart. That's 64%. Again, assuming the risk to reward is about the same. So 64% is much better than the first one we looked at, which was 56%. We've increased the probability of being right by 8%. What if we had a 3-day chart? That's 60%. So we've gone through those different time frames, the 144, the daily, the 2-day, and the 3-day. It's 4 different time frames we've cycled through. And we figured out the 2-day was the best thing. The 2-day was the one that worked for us. Now, the difference in here is that's about 80 pips. So it's still not as small as 8 pips, but it's still not as big as this one. So it still does the job to get us in at a smaller risk, but we can play with those time frames to keep the probability as high as possible. And that way, balancing those three numbers in a better way. So that's how we can use our UFO stats, by changing variables, changing time frames, to see what works better for us. By the way, the 2-day and the 3-day time frames don't exist, I believe, don't exist in TradeStation, but they do in TradingView. So what I'm going to do now, I'm going to cut the stream to the free platforms. I'll summarize very quickly what we just spoke about and let you know where you can go if you have any questions. I will then continue in the closed coaching, and in the closed coaching what I'll do is I'll show you on TradeStation, TradingView. You don't have UFO stats on TradingView, but I'll show you how you might be able to use the cycling of time frames to help you with your entries. So I'll come to that in a minute, but I will cut the stream before I do that. We'll do that in the closed coaching community. Coming back, just for those that are watching on those free platforms, just to summarize what we spoke about here. For some of you, you guys are UFO veterans, right? You've been trading UFOs for many, many years. You know how they work. For some of you, this might be the first video you've ever watched that has anything to do with UFOs. So hopefully I've not gone over the heads of the new guys, and hopefully I've not gone too slow or boring for the guys that might really know what they're doing. Essentially what we're doing when we're trading is we are always trying to balance the likelihood of being right with what we lose when we're wrong, with what we make when we're right. Those are the three things we need to use. There are many ways we can balance those numbers, many different methodologies we can use, many different time frames, many different markets, many different combinations of all these things that can play with those different numbers. If you have UFOs on either TradeStation or Top, you can use the UFO stats, which are up here. You can use the UFO stats to help you figure out which time frames might work better for you with the methodology that you use, with the time frames that you want to use, within that range of time frames. Essentially, what we're doing is on the left, we want to know, should we buy, sell, or do nothing? And we have an app that answers that question for us. That's AutoClimate. Then if we've decided we're going to buy or sell, we'd rather buy or sell on a slightly smaller time frame so that we can reduce our risk. It's small. If it's a smaller time frame, everything's smaller. So we can still use this app, this AutoUFO app, to find better places to buy and sell that keep our risk smaller. And by playing about with the time frames and using UFO stats, we can find the right time frame within a range, within a few choices, that gives us good probabilities as well, or the best probabilities available between those two or three ranges. And then that way we balance those numbers, probability, risk and reward, in a better way. So that's the summary of what I've just gone through. So hopefully that makes sense. Any questions, email me. Is Becky@tradictiv.com. There you go. Becky@tradictiv.com. Didn't quite fit there, but hopefully you can read it. You can also email us at support@tradictiv.com. .com. There you go. So you can also email us at support@tradictiv.com as well. Happy to help. So I will love you and leave you for those that are watching in the free sessions. Oh, I've just seen a question come up. Let me answer this on the live one before I cut the stream. No, this might be off topic, but I have your scanner and I want to know if I trade the 15 minutes, shouldn't I scan on the 15 minutes instead of the day? Yeah, so how can I change it from the daily? Okay, cool. So, Nick Nack, the question that just come through on YouTube, I'm sorry, I missed that. It might have come through a little bit before. Hopefully you can watch the recording if you're missing this now. So that's on TradeStation. There are, without having it in front of me, there are different scans on that scan. You've got some that are daily, some that are 15, some that are 4 hours, I think, all on that same list of scans. What you could do, I'm pretty sure I'm right in saying this, it's easier to change the symbol universe than it is to change the time frame. So let's say you see one, let's say you're trading stocks and it looks something like that. It will say daily and it will be like daily up or down if I can find the right, it will be something like that, daily up and daily down. And that might be for stocks. And so you want to trade stocks, but you want to trade them on smaller time frames. So you want the scan not to be a daily, but a 15 minutes. it's actually better or easier to go to the, let's say the futures one that will say 15 up or down. Go into that one, go to symbol universe and change it to, instead of being futures, to be stocks. And then that way you get the 15-minute time frame to on a different symbol universe, so different set of markets. So you would be looking at stocks instead. I'm pretty sure I'm right in saying that easier to change the symbol universe than it is to change the time frame. If you struggle with that, or if you need help with it, go to support or email us support@traddictiv.com and we will help you with that. Okay, we'll talk you through it. We'll maybe send you a different scan or something we can do to help. But I think what I've just explained helps with that. So hopefully that's helpful, Nick. I'm not sure if you're still there, but hopefully that has helped. If not, like I said, support@traddictiv.com will help. So I'm going to cut the stream now to the free sessions. I'll continue in the closed coaching where we'll just look at TradingView and show you how you can use TradingView to help you with your entries by cycling through those different time frames. And I'll be back in 2 weeks, I think, for the next sharpening session. So I'll see you guys then. There'll be Forex sessions that I'll be doing and stock sessions that I'll be doing between then, as well as the market commentaries, and of course my colleagues that do amazing sessions in options and futures as well as our psychology sessions that are important. So join us in as much as you can if it makes sense for you to do that. Hopefully the more different things you see, the more it makes sense, the way we talk about the markets, the way we do it. We're always here to help, so hopefully you guys find it, the more you do, you find it clearer and clearer. So if you are watching in the closed coaching, give me a second whilst I cut the stream. For those that are watching free, hopefully this was informative and helpful, and email us if you need any help, and have a great weekend. So give me a second, guys, if you're in the... Oh, brilliant. I've just seen Nick. You can email them. Try the suggestion I gave, see if that works. But otherwise, I should be able to help. Okay, so I'm going to cut the stream now, and I will see you guys... Oh, okay. Sorry, I know I keep saying I'm going to cut the stream, but this question is coming through YouTube, so I don't want to cut the stream and then lose this conversation. So you've emailed support but no answer yet. Okay, no problem. They should get back to you very, very soon. They're normally pretty quick with support. But like I said, if you go into the futures one that says 15 minutes, and then go to the scan criteria and the symbol universe, try and change that to stocks, if that's what you're using it for. If it's stocks you're using it for, I'm assuming, considering you said the daily one. So yeah, just change it to stocks and then that should work. But if not, support would get back to you, I'm sure, tomorrow or at the latest the next day. Okay, right, I'm going to cut the stream now because hopefully that makes sense. And good luck, Nick. Let us know. Email me as well, by the way. Email Becky@traddictiv.com. If you don't hear back, then I can sort that out as well. So, alrighty. I will let you guys go and I'll carry on in the closed coaching. Good luck, Nick. Hope you get that sorted on the scan. And I'll see you guys soon. Have a great rest of your weekend and see you next week. Take care. Bye-bye.